The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Hi, everyone. No, not Tommy and Tommy. This is Basil Chapman. Usually I do the next hour. I will be doing the next hour, but I'm sitting in here to help out because they both had a money convention. And I'm here, Basil Chapman, Tiger Technicians Hour is usually my show. This is, in fact, the moment that we have the two O'Briens. And what we're looking at is the Dow up 15 at 18,884. The S&P is up 5. Let's call it up 6 at 2182. The comp index is up 15 at 5310. Volatility index is back down underneath. I always talk about the 15s as your benchmark. Above 15s, you get selling pressure. Below 15s, you get buying pressure, especially when you're underneath the teens. So we're almost close to the 12s here, and that will be creating good support and at least buying pressure as I see it. Most importantly, we look at the futures. We're looking at them up 7 at 2180. And let me go through this. You got gold up 1 at 1225. High-grade copper's up 0.32 at 22.53. Silver's up 3 cents at 16.96. Bonds are down 230 seconds at 153 at 154, let's call it. And the dollar is at 100.31, having made a new recovery high for that missing leg D in the Chapman wave that had been waiting a year and a half for, and it's finally, a year actually, and it's finally here. Crude oil is up $1.35 at 46.92, and I believe from a TD Think or Swim, we've got the one and only Kevin Hinks. Kevin, are you there?
Good morning, Basil. How's everything going? Nice to talk to you again.
Nice to speak with you. And I got a question for you. In the entire market spectrum, as you're looking at it right now, and especially since you are the master of the options, what are you looking at that to you is just jumping out and saying, I'm here, trade me?
Well, we've been talking about the last week or so on our Swim Lesson show, how this was a sector rotation like I haven't seen in years, right? And some of the very
certainly the speed.
What's that?
The speed of the sector rotation is absolutely. It was within an hour of the opening. Yes, right.
It was vicious. I mean, and some of the names that they rotated into and out of. If you're a believer in the FANGs, right? Facebook, Amazon, Netflix, Google. If you're a believer in those, they hit them pretty hard earlier in the week, right? And
correct.
I found it fascinating that they rolled out of Amazon and into the bricks and mortar retailers. I thought that was fascinating, right?
I was talking about that yesterday, yes.
Right, and they rolled, they sold bonds and they bought banks, and there's been, these banks have had an unbelievable run because of the expectations that interest rates are going to be high. So the banks have been a great trade. The retailers have been a great trade. The precision that this sector rotation was. How about this? They sold gun makers but bought defense contractors, right? I found some of these fascinating, these relationships.
The funny, it's so interesting that you're talking about. I did my work over the weekend that I usually send out extra charts to my subscribers, and I showed how the stocks like Northrop Grumman, Raytheon had huge spikes, and it was actually based on there were no facts, and President Trump elect is really not president for another almost 2 months. It was really fascinating. Same thing with the bank. The speed with which we got that emotional response was something that you really see if you're looking, as you say, into the sectors. You've seen indices turn around like that, but not entire sectors. Yes.
Right. It's like within hours, Basil, we went from a Hillary Clinton economy to a Donald Trump economy. And they tried to do it as quickly as they could. right? And the moves were vicious, and we made note of it the one day that the NASDAQ was down huge and the Russell was up big, but the SPX, the S&P 500 was basically flat on the day, the one rotation day. So markets were moving. It's just the overall market wasn't moving, but the individual sectors were flying. It was just, it's been a fascinating, 8 or 9 days. That's for sure.
It is. And what's interesting about it is we're going to see within another 3 weeks or so going towards the end of the year, whether or not this is foretelling an entire quarter coming up, or whether it's just an emotional response, and then we need to see some kind of a correction. This is a very interesting moment because the speed with which you've got these moves are usually what you'd look at over months, not hours or days.
Right. And now from a trading perspective, what was basically the basis of your original question was you got to make a decision on these banks, right? You got to make a decision.
That's right.
Amazon sold off enough that you can start to nibble on Amazon or Facebook or, even Apple is down $13 or $14 off its high.
Kevin, I got another question. We were about to go to the break. Do you have time to hold off so that we can go through into the next segment? Because I really have a couple of questions that I think I'd love to hear your answers.
Of course, Basil. No problem.
Okay, we'll be right back with Kevin Engstrom, TD, Think or Swim, Basil Champan, sitting in for Tom O'Brien. Dow's down 3, S&P's up 5.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
What you're looking at, the Dow's down 4, S&P's up 5, and we have Kevin Hinks from TD Think or Swim, who does a fantastic show every day at noon, straight after my show, which is the Tiger Technicians Hour, and just a great show on options and really thinking about the market, how to position yourself in such a way that there aren't really surprises because you are really anticipating surprises. That's what you can do with options. So my question to Kevin was, Kevin, we've already seen spectacular moves, rotational, as he said, through the different sectors with moves that in certain cases are what you'd see over months and months, sometimes over a year, 17, 27%, something like that. Now what is the issue? What is striking you the most? So, Kevin, fire away.
Well, the first thing I look at as an options trader and a lifelong options trader, the VIX is catching my eye. VIX sitting around 13 is low. Right?
It is.
And it may not be low for July and August in the middle of summer, but for early November, mid-November, I think the 13 VIX is pretty low. Now, that doesn't necessarily correlate into low implied volatility in the individual name that you're trading, but it's a red flag because all these sectors are connected. So
Can I just interrupt for 1 second?
Sure.
This is the first time that I've studied and worked with the VIX. My subscribers know that every single day I give parameters for the VIX, and the way we're looking at the VIX, we use it as a very strong technical tool. This is the first time in all the years, decades, I should say, of looking at the volatility index that it's ever struck me when you just said that you look at it as being in the 13s in November. There's a slight differentiation between when it is in the midsummer. I thank you. I've never thought of it that way. Very good point, because last year we saw what happened late December, early January. Keep going. Yes.
Right. I consider, I would look in the middle of summer and say a 13 VIX, you know what? It's getting cheap, but it can go lower, right? So I keep some of my powder dry. But a 13 VIX in late October, early November, it does strike me as a much cheaper level of implied volatility, and it's something I'd look at. And ironically, Basil, today's Swim Lesson show is about calendar spread, which is, as you know, a long Vegas strategy. We'll look at the calendar spread, the diagonal, the double diagonal, everything in the calendar spread family, which is a long Vega strategy. So that's what I'd be looking at right now, is something in the long Vega to take advantage of.
So can you just explain that more in English for those of us who are, I've traded literally over the years thousands of options, but usually they're naked options. I'm going for a directional move. So just explain what your thinking is here with the Vega and all, if you can, for a moment.
Sure. Vega is an option sensitivity to changes in implied volatility, right? Implied volatility can be traded just like a direction can be traded. And matter of fact, for professional options traders, implied volatility is a mean reverting instrument, right? When it gets high, it always comes back down. When it's low, it comes back up. And traders love things that they can trust, right? A stock can go up and never come back. A stock can go down and never rally back up. But implied volatility will revert back to its mean, right? When it gets high, when Apple's volatility gets in the mid-40s, you know that after this event, it's going to go back into the 20s. When it gets into the low teens or high teens, you know that as we get near an event, Apple's implied volatility is going to creep up back towards, mid-20s and 30s. So you can bet on that, and traders love things they can count on. And implied volatility is something you can count on. It's mean reverting, right?
Good.
So that's why you can buy long Vega strategies, which means you're profitable when implied volatility rises. You make money off long Vega, and something that we go over in swim lessons all the time.
So the expansion of the price or the contraction of the price is really what you are planning. And in this particular instance, what you're looking at is you're looking at that historically at this particular time of the year in your relationship to the VIX, down in the 13 says that there's a better chance that it's going to be moving higher than lower.
Right. You may have a half a point or a point in downside exposure to VIX, but upside you could have 13 or 14 points.
Unlimited,
on the
yes.
upside. Right. So I like, I use a phrase in swim lessons all the time. I like to buy things where I can see the ground. Right? And
Correct.
Right now, the VIX at 13, I think I can see the ground. It's not going to 10, right?
Not
Could it go to 12? Maybe.
It could go to the 12s, yes. I think going to the 11s would be really, that would be quite remarkable under these circumstances at this time. I would agree.
Exactly. So I think my risk is maybe a point in VIX, a point in implied volatility. I like my odds there.
That's terrific. Good. That's great to know. And
so we're going to concentrate today on long Vegas strategies and how to look at them, how to price them, how to put them on.
And that is at noon today, folks. That is noon Eastern time. Fabulous show. I like the discourse. I like the give and take. I think that's terrific. And what's important about it is that most of the time, not all the time, but most of the time, it is in the kind of language that most of us can just pick up immediately what the point is, and that's really important.
Yeah, you're right. 30 years in a trading pit does change the way you communicate. Right, you're used to communicating a different way, and that's a constant struggle for Scott and I, is to get that language that the listeners can understand.
Because the concepts are basically you're either going up or you're going down, or you're looking at contraction. It's the terminology, and that's really the issue. Right,
exactly. And the more we get people familiar with that, the more we raise their trading IQ. Right,
absolutely.
We absolutely try to, just close the gap between that beginning retail trader and that intermediate and then that advanced trader. We try to give a little bit something for everybody on our show.
I think that's terrific. So, folks, noon today, you will hear Kevin, and they will be discussing this particular aspect at this particular moment. It's just a gift to you, a free gift. In fact, it's remarkable that you're able to do this, and we all appreciate it, and we're looking forward to it very much, Kevin.
Always a pleasure, Basil. I love talking to you. Have a great day.
Thank you. Have a great day. So, folks, that's the option hour. Basically, we call it I always say the swimming lesson because that's what it's called, TD Think or Swim, and at noon today. So let's go back to the market. We're looking at the VIX, and the VIX right now is at 13.13. You can see that I've got a trend line. Let me use a different mouse. This one's starting to do some funny things. You see that trend line in the daily chart on the left? In the middle is the weekly, and on the right is the monthly. And you'll see that in this cup formation that I've been drawing, which basically went to there. I think we might even be starting another cup formation. So in this particular pattern right here, there's that trend line. We're going to be watching this closely. I suppose I should actually stretch this out a little bit. And what we're looking at that is if the VIX breaks under $12.60, that'll be a real boost to the market to move higher. But at this particular point, what we're looking at is, for me, in the 13 says that there's still buying support. The Dow's down 5, S&P's up 4.5, and you can see that acting up right now. I'll be right back. Basil Champan sitting in for Tom and Tommy. I'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Sitting in, Dow's down 9. So let's go through a couple of things I was asked about. The XLE is in, it's difficult to say what the wave count is in the daily. I've got it as a leg D with a very big distance between peak C back in October, and here we are in middle of November, but I am going to call it D for now, and I'll tell you why. In the weekly chart, that is clear, and that is in a brand new leg E to the upside, and is also made, oh, this is going to be very interesting. Was that a peak or not? It's just a little different. Usually I can tell. 74, it's a 94, 98, 39. Okay, so this is still leg C in the weekly chart. So the energy, S&P Select Energy Spider ETF, the XLE, is trading up 19 cents today, with the MACD and stochastic actually very, yeah, I would say the MACD is strong, and stochastic at 88 is strong. So I'm just going to give parameters, and I'm going to say very good action. But once you hit, look, I love this. Look, have a look what happens when you put these moving averages in, just as a guide. You don't have to follow them at all until they come up for notice. And in this particular instance, when the XLE back in May of 2015 broke the 77.98 support, no, it wasn't. It was when it broke the 79 support. From that moment on, it never once got even close to the 200-period exponential moving average, and that was back in May of 2015. Here we are, November of 2016, so it's a year and a half, and we've just at 72.39, we were 6 cents away from hitting that 200-period exponential moving average. That's how long it can take some time. But the closer you get, you see how close we are, and finally we're getting to touch it. My anticipation here is that the XLE will go a little higher, but that the 200-period moving average in the monthly at 72.40s is going to be very strong, a magnet for the upside and downside. I'm sorry, I was looking at a weekly chart. That was a weekly chart. And because of it, it says that, yes, you could go to the 73s, but there's a real good chance you're going to come back, test the 71s, and hang around this area for a couple of weeks, maybe even a few weeks. So that was the answer to that. What am I looking at? I'm looking at the XLE acting very well. If it gets repelled from this line, that would say that the XLE is going to break 69.30 and trade under that for 2 out of 3 sessions and say, hey, I can't handle that 200-period moving average. I'm going to be sticking with a 9-period moving average of 69.60s. That's going to be my benchmark. So that's what I'm looking at. So what am I looking at? I'm looking at the XLE, S&P Select Energy SPY ETF at 71.53, up 21 cents, going a little higher, maybe even a point higher, but then having a lot of resistance and having to just really swing. Use this as a fulcrum, the 72.45 200-period moving average in this middle chart, the weekly chart, and bounce up and down around it. So let's do this. We're looking at the next question was, there's also another good question. Ready to go? Oh, there it is. Duffy in the Den asks about, hey, did that just disappear? Basically, it was IDU. Now, I've never actually even seen the IDU, but its root, which is the iShares US Utility ETF. Actually, I probably have done it years ago. If you don't mind, Duffy, I'm going to go to the XLU. Let me just have a quick look. So that went peak A, B, C, D, E in the daily. And that's, yeah, it's the same thing. All right. Very, almost the same chart. This is the S&P Select Utility Spider Fund. Sometimes you don't get them to match. If you look at the RTH and the XRT, the retail sectors, they have different components. This one looks very similar. Now, the question, was there a question? Opinion. Yep, my opinion. My opinion is that the XLU's had a huge decline. First of all, it's had a spectacular run-up. The utilities have gone, like bonds, they've gone from a low of 22.48 back in 2009. And this is utilities. You can expect this of high-tech stocks, but you don't expect it of utilities to go from the 22s to the 53s over a period of time in this up channel. And all I can say is that within the up channel, the look of the up channel with that thick black line, which is the 9-period exponential moving average, suggests to me that the 48.47 area, let's call it the 48.40s, is going to be very strong resistance at this particular stage. What we're really looking at is that within the weekly chart, yes, it's leg D, and MACD, the MACD is still weak, and the stochastic is flat at 19%. I don't see much. I can see a bounce. I can see a bounce to at 46.60 right now, up 18 cents. I could see I could see a move that takes you, and let me just finish this up in the notation. This should be C, and that should be D. I could see a move that takes it to the 46.60. Quite quickly, if it does it at all, it's going to have to do it quickly and go to the 47.20 to 47.40s. That's where the big test comes. If it can then skip right into the 48s over the period of the next 2 weeks, then I would suggest to you that the utilities, and it might be with bonds as well, are going to have a sideways move until something happens in the Fed decisively to actually raise rates. It's been done without them. They didn't even need to have the Fed doing anything. So what am I looking at? A close below 45 at any stage, even if it's just a one-day close below 45, is really negative. And that would say at some point we'll be looking at the 200-period moving average on the downside in the weekly chart of 43.66, call it 43.60s, that will be hit. On the upside, I see limited bounces, just these single leg. And the best case that I could make is that maybe now you get the arch formation instead of an inverted V. It takes a little more time, and that arch formation could turn into a lowercase h that goes to a lowercase m. So upside, very limited. Downside at this particular stage might be limited, but not if you close under 45. I hope that makes it. That's the route. So I'm using this for my that's the way I can look at the IDU. All right. Now, a couple of things that I had a question about. Dries, this is an incredible thing. I don't even know what's going on here. Dries is down 41 at 31.63. I have no idea who was actually buying it and why it was even trading at 102. I mean, this is a stock that the other day was down in the 4.21 area, 384. I at first thought this was like a 10 for 1 or 20 for 1 split. Is this really? Is this no? Is there nothing? Is this not split? This is a stock itself. Can you imagine having a stock that was just absolutely asleep for months and months, and then out of the blue it goes from the 4s and 5s to the 100 level? What kind of? I don't even understand it. So something is happening here that don't touch this, folks. Dries. This is Dry Ships Inc. So funny because just like a week ago I was looking at this and I said, gee, they haven't moved these dry ships. Who would have known that in 2-3 days you could have a spectacular move like that? Basil Champan, this is the Money Masters show. I'll be right back after this important message.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
about people's thinking, etc. The 10 is a fantastic medium here at TFNN. So we're looking at dry ships. And dry ships goes from the 4s and has a spiral up to 102. And I'm thinking to myself, well, first of all, I saw it at in the 40s. No, I think it was maybe yesterday. Well, time flies. Whatever it is, I'm looking at it about 102 round number high, 73 close, round number again. And I'm thinking, this is really strange. And then this morning at the gym, I'm looking and I'm seeing tops is skyrocketing up and tops, whatever that is, top ships. And there were a whole bunch, and I'm saying, oh, man, they are on fire. What? That's an impossible move. Nothing can move without really spectacular news to go from the 5s to the 15s. Not 102. There must have been an inverse split. Well, there was an inverse split. Look at this. Tops, which was trading, if I might be wrong, but I think it was up 7 at one point this morning. So that put it in the 15s. It's trading now at $3.86. Yesterday at a high of 8.40. It's down 2.23 from yesterday's close. That's 36%. But anyone who bought it this morning, and dry ships is at TRU. Sorry, I was going to say 0.245. Wrong symbol. Here we go. Dries. Down 49. It's down 67%. It's still 23.82. But that's what did I say? In the down 15-1 split. That is incredible. Wow. All I can say is, wow. Don't touch these things. What was that one that was, I used to always look at it, DSX, Diana Shipping, also down 64 cents, down 16%, but it had a spectacular move. Just the other day, it was at 236, and it does a double. It gets to 497. And now, look where it is. Oh, these things, don't touch the shippers. Actually, I wouldn't be surprised if in another 2-3 weeks, they come alive again, because that's what happens with these darn things. But be very careful. All right, so let's do a couple of things. We want to look at the shorter term, and we want to look at, that was not the chart I wanted. I want to go to the futures. And there was this almost like a single leg A to the upside in the futures, going from the E-mini in the 10-minute chart, going from 2171, the low of 10 to 9 this morning, Eastern time. It spirals up to the 2181.50, 2181.50 area. And now it's pulling back, went to 2176, and it's trying to form. And what I like to do is to block in immediately. What my eye sees is I see a trading band right here. So that to me is a trading band. I would say that you would have the Chapman wave Eiffel Tower single leg A failure if it goes one more time, takes out the low of 2175.75, goes under 2175. I think it goes all the way back to 2172. But rarely, because the S&P 500 is acting quite well, I'm thinking that there will be a trade that takes it to the 2181 level, and that's going to be the very big test. Is there going to be some kind of support? Now, you've got your option show coming up at noon today with Kevin Hinks, Think or Swim, TD America. I'm looking at this and I'm saying this is a really good chance to be able to look at options and say, what presents itself right here? Because we've had an extraordinary one-week move. And look at this. This is the BKX index, BKX, that's all. BKX index is trading at this point at, when I last looked, it was up 80 cents. It had a spiral. Look at the weekly chart. That last week went from the 74 level to do the high a few days ago of 85.92. Well, 10, 11 points. That's really what 14, 18% for some stocks had an even bigger move. That is very unusual. But what is fabulous for me is that the monthly chart has started to move into leg B. That's the only way I can count it. And that foretells further price increases over the months going into the KBW Bank Index, which is the basically these are the, I think, the money center banks. The KRE is the regionals, KRE right now. Wow, look at that move. Look at that move in the monthly chart. trading at 50.84, up 42 cents. That's an even more spectacular move. I do have it as an alternate account, F/B. Yeah, I wouldn't be surprised if we've got a little bit of a consolidation going on. Not a little bit. A consolidation. We're going to talk about a consolidation either of time or price. But at this particular point, I still see the technical strong enough to have some flurries towards the upside, but maybe fairly limited in this particular instance. So now let me do this. I wanted to show you, I had spoken for quite a while now about the dollar, that I was expecting the dollar to go to a new leg D. Now, what is a leg D? I wonder if I can find it right now, just to make this as clear as I can. Let's go there, and I'll find it in 1 second. And we've got it right here, and there it is. I'm going to grab this particular chart right here, and I'm just going to explain very briefly. In the Chapman wave methodology, we look for the most identifiable lowest low bar. You want to look to the left as far as you can to see, is that the lowest low? And then you merely count each successively higher peak and alphabetize them, uppercase on the upside, lowercase on the downside, alphabetize them in sequence. Uppercase A, B, C, D. It can only go to a G, and occasionally we do get Gs. Or what happens is it recycles. So D is what the objective is to get you to D, and then other things can happen. What do I mean by that? Well, have a look. We've gone peak D right here at 99.12 on October the 25th in the dollar index, and then you get, look at that sharp pullback from the 99s to the 95s. For this index, that's a pretty big pullback. And then you scream in a single leg to the upside to the latest high of 100.57. So that daily chart says, based on the stochastic being very strong at 97, with the MACD very strong, I'm suggesting to you that the dollar can go a little higher. It could go into the 101s, 102.50, I'm not sure, but I'm going to say it can go to the 101s if this holds as it is now very nicely. And that's going to impact gold. It doesn't mean that gold has to smash to the downside, but it just say that gold could have limited upside, but most probably lower highs and lower lows, at least for this period. Now, this is a leg E. It could have recycled, but I'm calling it leg E in the weekly. That's very positive. But in this chart formation that we were looking at, I'm going to be talking about chart formations. If you don't mind, I'm just going to break for a moment to tell you that I've got a webinar coming up. It's a 3-series webinar. Let me go to the front page of TFNN. If you go to the front page of TFNN, you'll see right here it says, simple technical tools to analyze charts. I believe very strongly that markets go either in a straight line up or down, or they have an arch or an inverted V, or a cup or a V-shaped pattern. It's just 3 patterns: straight up, straight down, or going from one point and circling to come back down to the same point. And it's either going up and then down, or down and then back up. And each one has part A and part B. So up, single line up or down, that's 1. 2 is a cup formation or V-shaped formation, that's A and B. And 3 is an arch or a inverted V, and that's 3A or B. So I'll be back, and we'll talk a little bit more about it. It's on December the 6th, the 20th, and the January the 10th. I'll be right back. This is the Money Masters, sitting in for Tom O'Brien, Basil Chapman. I'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi,
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks. We're back. Basil Champan sitting in for the Tom and Tommy show. So what we're looking at here is the euro-US dollar, and it's still pulling back at 1.06. And everything about this chart says that even if there's a little bit of a bounce, you see that H pattern, that lowercase h right there, I'd already drawn this in a year or two ago, going to a lowercase m. This is in my CD introducing the Chapman Wave methodology. I talk about this pattern. It's the H that goes to an M. It can become a continuous pattern. It can happen. It can keep going. But what's really important about it is that invariably it will test the low, in this case 1.0538 of December. That was the dollar. Remember the dollar? That was the second bounce to a fractional new high. And then the original one was March of 2015, where it went to 1.046 in the euro-dollar currency pair. So we're watching this really closely. If you look at the 120-minute chart, look at that pullback. I was actually following this last night. So it just went to A, B, and whoops, it comes down again. And it's making a lower low. So this, to me, I think that the strength is still in the dollar. We're going to see. Is it going to make a fractional move as it did back in December and then turn around very sharply? I think this time is a little bit different. We're going to go a little higher, and then we'll have to test and see. So let me just go back to this. So my webinar series coming up, if I can just get back to it right here, is on December the 6th, Tuesday, 6 o'clock to 7:30, December the 20th, 6 to 7:30, and January the 10th, 6 to 7:30, and simple technical tools to analyze charts. On the first one, I'm going to be talking about, yes, I'll talk about the Chapman wave and how you use the counts. I'll talk about the instant restart, but there is going to be so much that you actually don't have to have the Chapman wave notation for, because it's purely how to draw the lines, how to recognize the arch formation. Look at this. There's a way of looking at this that we could say that there's a left side, right side price time match. I love to do that. We looked at the pattern, and we, based on my Chapman Wave methodology, we didn't know for sure, but we had a great expectation that the dollar should eventually make that leg D, because that's what you expect in a mode in the Chapman Wave methodology, and we've gone to that. It doesn't mean to say, so I had a question yesterday, is this time to short the dollar? No, history doesn't have to repeat exactly. Look, the time sequence is just like 2 months extra. but it's done it. It's got the pattern that was drawn in a long time ago, that double cup pattern. And now we're going to have to wait for the dollar daily to give us the sell signal, then sell mode. Then the weekly has to follow before the monthly. So the whole month of December has to conclude before you can even call this a peak D if there's a turnaround in December. I'd be real careful shorting the dollar at this particular point. Not yet, not even on a short-term basis. Okay, so we got that out the way, and now I just wanted to say, if you stay tuned, in my show, I go through many of these charts. I talk about them based on the Chapman wave formations that we always look at, the sequence of events. In my webinar, I'll be talking about how you can use the daily or the 120-minute chart for an entry, and then the daily, and then maybe the daily leads to the monthly, and the weekly, and then the weekly could lead to the monthly. And that's how time frames work. You go from 10-minute to 30-minute to 120-minute. That's the same relationship, daily, 120 daily, weekly, and you can miniaturize that. That's all part of it. And if you already know quite a bit about the Chapman wave, this is going to be a way of clarifying it. There are so many things when I go through my CD. I always say, oh, I haven't mentioned that for a while. I kind of think of it in the back of my head, but it's worth talking about. There are 27-something chapters. These are all different patterns. So I'll be going through a bunch of that in those 3 sessions. And there's a special for subscribers, and hopefully you'll think of attending it. I'll be back in a few minutes for my own show. Thank you for being here. The Dow's down 4, S&P's up 5. So far, nice action. We'll see what happens by the end of the day.
Since 1984, Basil Chapman has been using the Chapman wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.